Hello and welcome. You're watching France 24. These are the business headlines today. The persistent weakness of the US dollar sparks a surge in the price of commodities such as oil and gold. A senior currency strategist will tell us what lies in store. In a stunning U-turn, US toy manufacturer Mattel apologizes for damaging China's reputation after massive recalls in recent weeks. And French Prime Minister François Fillon throws a cat among the pigeons by saying that the French state nears bankruptcy. Despite a slight rebound today, the US dollar remains close to historical lows against most currencies. The euro has strengthened against the greenback above the $1.40 mark. And for the first time in history, $1 Canadian dollar equals $1 US dollar. Well, for more on this, I'm now joined by Boris Schlossberg, senior currency strategist at the online trading website dailyfx.com. Thank you for joining us here on France 24.
Great to be here. Enchanté d'être ici.
Boris, it seems like the slide of the dollar has accelerated in recent days. What has happened?
Well, certainly the primary reason for it has been the cut by the Federal Reserve Bank by 50 basis points. That created the fundamental foundation for why the dollar has become weaker. The spread between the dollar and the euro now is less, and therefore it makes it much less attractive for speculators to buy dollars. But the real big move really came when it broke the 140 level. That was the big psychological barrier. That was the record high. Once it pushed beyond that level, all of the stop orders in the foreign currency market really began to go through, and that pushed it all the way up to 141. So it's been a both sentiment and a fundamentally driven type of a trade.
And is this US dollar plunge related to the recent surge in commodities prices, such as oil, for instance?
To a degree, but not really quite. The drive in the oil market has really been demand-based. Demand, especially out of emerging nations like China, has been enormous. For example, in Beijing, 1,000 new cars are put on the road every single day. So we're creating this incredible new demand for gasoline out of all of these emerging nations. Add to that India, which is a subtropical country that also is now going industrialized and therefore needs demand for oil. Oil prices are going up naturally because of their demand, but as a subcomponent of a weaker dollar, they therefore are clearly also going up for that reason as well.
Is this the reason why the Canadian dollar reached parity against the US dollar?
Exactly. The Canadian dollar has been the primary beneficiary of higher oil prices. In fact, the market view now is that the Canadian economy is so strong because of its resource base that it can withstand any kind of a slowdown in the U.S. economy. Typically, the Canadian economy, U.S. economy are very intertwined because Canadian economy exports a tremendous amount of its product to the U.S. But now, because of a demand for all of its resources from the rest of the world, the market just feels very strongly that the Canadian economy could perform much better. And therefore, the Canadian dollar, for the first time in 30 years, is now at parity.
Among the reasons for this weakness of the US dollar, you actually mentioned this 50 basis point cut by the US Federal Reserve. What should we expect from the Fed in coming months?
Well, that's going to be the $64 trillion question for the foreign currency market, because the Fed is certainly hoping that they are one cut and done. They are hoping that this was the right medicine and enough of a medicine to stabilize the economy and let it grow further. If that is the case, then the dollar should really stabilize at this point and perhaps even strengthen as we go into the second quarter of the year. But if the economy really is not able to rebound, if we're starting to see further slowdown, especially if the non-farm payrolls, if unemployment in the United States begins to decline as we've seen already in the last month, that's going to necessitate further rate cuts and most definitely further weakness in the dollar.
Is there a risk that this 50 basis point rate cut coming at the very moment when oil prices reached record highs, it could actually fuel inflation?
Absolutely. This is a tremendously dangerous game that the Fed is playing, and they've made a very concerted, essentially conscientious effort that they're going to err on the side of inflation rather than the side of unemployment. They'd rather see high inflation rather than high unemployment. However, it could very much run away from them. Remember, earlier, before, China had a very deflationary impact on the rest of the world because they would continuously lower prices. That's not the case anymore. Inflation in China is also growing, and therefore, the U.S. cannot count on a deflationary force out of China. So it's definitely a very, very tough road that they've decided to choose. And if oil prices move further, perhaps even to $100 a barrel, that's going to create tremendous inflationary pressures in the U.S. economy.
inflation concerns. That's precisely what actually prevented the European Central Bank from cutting interest rates in the past months. Isn't this decision by the Fed putting much pressure on the European Central Bank, at least not to raise interest rates in the coming weeks?
Absolutely. Absolutely. As a matter of fact, we'll go on the record here to say that we do not think the ECB will raise rates for the rest of the year unless we have some extraordinary circumstances, mainly because the pressure, both political and monetary, is enormous. Euro at above 140 is a natural deflationary force for the European economy. And furthermore, should President Trichet decide to raise rates one more time, it could facilitate euro going to 145, and that's going to create tremendous amount of pressure on European exporters, which have been the primary driver of growth in the Eurozone. We already see from President Sarkozy lots of complaining about the fact that the euro is too high, and expect to hear a lot more pressure from political leaders should the ECB decide to raise rates further.
Maybe more pressure in the coming months. Well, thank you very much, Boris Schlossberg from fxcm.com for joining us here on France 24. Thank you. And speaking of global oil supplies and Saudi Arabia, well, Riyadh will take its part in the first big US refinery expansion in 3 decades. The kingdom is to spend $7 billion along with oil company Royal Dutch Shell to more than double the size of a common oil refinery located in Texas. The expansion will make Port Arthur the largest refinery in the United States, where there are no approvals for new refineries, leaving expansion as the main option to increase capacity. Let's now move to China, where questions over the quality of manufactured goods have caused international concern in recent weeks. The French Finance Minister, Christine Lagarde, paid a visit to Beijing to see firsthand what measures are in place to ensure products are being properly tested.
The minister devoted a significant part of her schedule to visit a quality control laboratory. All the products tested here are for export. The aim? To demonstrate that the authorities are fully conscious of the issue after the scandals involving lead-based paint on toys made in China by the US company Mattel.
I believe the Chinese authorities understand the importance of adhering to European safety standards and French safety standards. Of that I have no doubt. And they've taken steps to tackle the issue. China should be supported in its efforts, which must be developed. I think that confidence can only be restored in a framework of cooperation, as well as in the framework of exchanges between our respective authorities.
The market in question is worth some $18 billion annually for China. The country is the world's leading manufacturer of toys and is expected to conform to international standards of quality control of its exports.
Here in China, in the workshops, safety standards should be respected, and any defects must be penalized.
An estimated 80% of toys sold in Europe and the US are made in China, and there is only a handful of laboratories such as this one. China has more than 10,000 toy factories, but only a tiny percentage of these carry out this type of quality testing.
The world's largest toy maker, Mattel, has apologized to China for damaging its reputation with a series of recalls. Around 21 million Chinese-made toys were deemed unsafe amid claims that they contained excessive levels of lead paint. But Mattel has now said it targeted some goods even though they met safety requirements. The comments came during a meeting with China's quality watchdog. Mattel also took this opportunity to stake its commitment to manufacturing in China and said the firm will invest $30 million in a new Barbie store in Shanghai. In France, just a day after President Sarkozy played good cop by trying to appease civil servants over painful economic reforms, Prime Minister François Fillon today warned that the French state was nearing bankruptcy. Speaking before a group of farmers in the French Mediterranean island of Corsica, Fillon pledged to balance state budget within the next 5 years. In recent months, France has alienated its partners who agreed to balance their budgets by 2010 by asking for a 2-year delay. Well, that's all for now. For more business news, please log on to our website. That's www.france24.com. Stay with us on France 24.